care what you spend. Here, we see silver coin supplies buckle on fever pitch retail buys. Silver prices have dropped more than 30% year to date, and demand for the physical metal has reached a fever pitch. United States mint sales of the American Eagle silver bullion coins have already hit a record this year. That's over 40 million ounces. It's blown away, again, this hyperinflation and demand. Prices aren't rising to reflect that for some reason. You can ask yourself. But even the monster boxes, which cost $12,000, there's 500 coins in there. Those are, people are gobbling those up as soon as those come out.
Price of silver demand is at all-time highs for silver and gold, but the prices are not reflecting this demand. Whereas the price for bonds and paper money is at its supply, I should say, is at an all-time high, and yet the prices keep going up. So it totally repudiates the idea of supply and demand economics. The more you create, the more the price goes higher. The bigger the demand, somehow the price is not reflected in the price.
I might add as well that even the ETFs in silver are adding record amounts of silver to their supplies, record demand for the silver ETF, not so much for the gold. They mentioned that while gold exchange-traded fund holdings have declined to a 3-year low, holdings in silver ETFs reached a record of 655 million ounces as of October 31st. Now, these are the Silver Liberation Army. These are the small guys who are disconnecting and disengaging from this corrupt system, the same as the top are by buying these Francis Bacon paintings. And I want to bring this to a final a recap of what we talked about on our last episode of Keiser Report, where we talked about the banker in Vietnam who faced the death penalty. Well, he was sentenced to death over the weekend. Vietnam banker sentenced to death for fraud, former finance chief and business associate to die by lethal injection for their parts in embezzlement of $25 million. So the pair were among 11 who were defendants in a 9-day trial, and they were sentenced to death this weekend. But the interesting piece about this article talking about this death sentence case is that it highlighted Vietnam's efforts to show it is stamping out corruption in the face of widespread public anger over the issue of corruption. So the public got angry, demanded their politicians do something, and the politicians have done something. So you wonder, you have to ask yourself, you wonder to yourself, is it who's responsible for Jamie Dimon getting away with crime after 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 crime? I
mean, the difference is that in the U.S., if Jamie Dimon was sentenced to death, then Lloyd Blankfein at Goldman Sachs would somehow figure out a way to get it on pay-per-view. So there's always a way to twist a nickel in the United States economy. There's no end to the fraud. You see, if you put one banker to death, it just means a dozen more are going to figure out how to sell tickets to watch the hanging, which I'd buy a ticket right away. You know, that would be the greatest thing, the greatest Christmas special in 20 or 30 years. You have Rudolph the Red-Nosed Reindeer and a hanging of Jamie Dimon. What's great for the family? You have some minced meat pie and maybe some crushed Jamie kidney stew. You know, I mean, give the kids and grandma, they all enjoy this. Great show. Merry Christmas and a Happy New Year to the banksters on Wall Street. Anyway, we got to go. Anyway, all this talk of hanging bankers has got me excited, but we have to go, Stacy.
Okay. Have a nice one with Jim Rickards.
All right. Stay tuned for the second half. A whole lot more with Jim Rickards.
In his secret laboratory, Tim Kirby was able to build the world's most sophisticated robot, which unfortunately doesn't give a darn about anything. Tim's mission? To teach his creation why it should care about humans and world events. This is Why You Should Care.
Watch only on RT.com.
Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Jim Rickards, author of the international sensation, Currency Wars. Jim, welcome back to the Keiser Report.
Thank you, Max.
All right, I want to do something here. It's called The News as Translated by Jim Rickards. Okay, first of all, here's a story. $1 trillion. This is the amount of money that the banks, central banks in the UK, US, and Europe did not have to pay out due to all of their artificially low interest rates.
Right.
So explain what this means to the people in real terms.
Well, you know, the central bank will sit there. Each of these countries has issues debt, of course. The United States Treasury issues debt, and the UK government issues debt. And the question is who buys it. And in the normal market, investors buy it. But in today's markets, the central banks buy it to a great extent. But when they buy it, they own the bonds, and they earn interest on that. So they have zero cost of funds because they're issuing currency that pays no interest. And they're making money on the asset side because they buy the bonds. So they make very large profits. At least in the with regard to the Fed gives that money to the Treasury, so it becomes so it's sort of a twofer. You get low interest rates, which reduces the government's cost of borrowing, and then you get this dividend from the Fed every year, which helps to reduce the budget deficit. But I always compare it to two drunks, you know, leaning on each other, so neither one falls down. Now the question, what's happening though, is that because of the taper talk and interest rates are going up, if you looked at the Fed's assets, if it were a hedge fund, and it kind of is a hedge fund, it looks like a bad hedge fund. If you marked it to market, the Fed would be insolvent today. It would wipe out their capital. They're leveraged almost 100 to 1 at this point, and again, a very small decrease in the asset value wipes out the capital. So now they're getting closer to the point where they're not going to be able to pay these dividends over to the Treasury without becoming insolvent. That'll make the U.S. budget deficit worse. Same phenomena in Japan and the U.K.
Here's a story. Carney hails recovery. Okay, as unemployment fails. Mark Carney, the new central banker here in the UK. Jobs market has not yet recovered, though, as inflation has now outstripped wages for 4 years, right? How can you have a recovery and have this at the same time, Jim Rickards?
You can. It means that real wages are going down. If the cost of living is going up and your wages are, even if they're flat, in real terms, you're worse off. If wages are actually going down, you're much worse off. So there's no recovery there. And Carney's comments the other day about, you know, maybe we'll raise interest rates in late 2015. In the computer business, you have something called vaporware. That's when you make an announcement, but there's no there's no substance behind it. This is the central bank equivalent of vaporware. What does Carney know about what employment's going to be 2 years from now? All the central bankers are experimenting. We're just guinea pigs in their experiment. But the idea that he can talk about where employment's going to be in 2 years is nonsense.
Meanwhile, the Bank of England said the housing market is supporting the recovery. So far, playing down worries that the market is in a bubble. They say that the housing market's going to boost consumer spending as households buy goods to fill their new homes, while rising prices enable them to borrow more, that's of housing prices, and spend more. So this is entirely based on blowing a bubble in housing.
Well, that's exactly right. We have dual asset bubbles in stocks and housing. So when they say, you know, rising housing prices are supporting the recovery, well, it's the central bank money printing that's supporting the rising housing prices. If that's not substantive, if that's not fundamental, it's just another bubble, and it'll come back down to earth at some point. No one knows exactly when, but, you know, maybe late 2014, early 2015. It's just another bubble. And you have prices are going up and interest rates are going up, and I have to borrow more. How does that support consumption? So people are over-borrowed to begin with. They're trying to deleverage. They're not running out to bid up the price of houses. Now, at the high end, they are, but that's not the real economy.
But they're defining growth as consumption instead of looking at, let's say, output as it relates to manufacturing.
Right. The way you grow is with investment. Consumption should follow investment. So you make smart investment, you add productivity, you create value, et cetera. That's how an economy grows. And from that, you get higher real wages and consumption. The central bankers have it backwards. They're trying to recreate the lending and spending, debt and consumption model, but there's nothing to support it except money printing.
Here's an interesting anomaly in the market. It's in the art market. As you point out recently in one of your writings, you've got all this money printing, and the Federal Reserve Bank and other banks say it's not causing inflation. However, we see huge inflation, almost hyperinflation, in a market that they don't necessarily care about, and that's the art market. Talk a little about it.
Right. Well, I'd say, first of all, the art market's not going up. The dollar is going down. In other words, when people pay higher and higher dollar prices for art, The art has intrinsic value. It doesn't really change. It's the art. It's the dollar that's going down, so I pay more dollars for my art. But you know, in the U.S., 100-year-old family money is the old money. You come here to Europe, these dynastic fortunes are 200 or 300 or 400 years old. When you talk to people who have that kind of wealth and say, well, how did you survive, you know, the 30 Years' War and Napoleon and Louis XIV and all that? And they say a third, a third, a third. 1/3 gold, 1/3 land, 1/3 fine art. You know, so when Wallenberg's burning down the village 10 miles away, you take your art off the wall, you put your gold in a bag, you ride away, you come back 10 years later, you put your gold back, put your art on the wall, and you should be able to establish title to your land. That's how you preserve wealth in the long run. So at a time when currencies are destabilizing, central banks are trashing currency, gold is should be a part of the portfolio, but art should be part of it also.
Okay, the price in the art market is moving up quite dramatically. Okay, you have record being paid for Francis Bacon triptych, I think $140 million. A fine pink diamond going for $60 or $70 million. Some blow up balloon animals from some American. I forget, Frank somebody. This is now hugely priced. So why is it not trickling down to gold market? I believe you would posit that because gold is a quote-unquote alternative currency or a central bank asset, or does the job of discrediting the dollar, there's an interest in keeping gold prices suppressed. And is this still the case? And give us an update on that.
Sure. Central banks care about gold. They don't care about art. So the art market, big auction, makes some headlines, etc. Ben Bernanke doesn't wake up in the morning and say, gee, I really got to crush the art market today. He just doesn't care. So that goes its own way, and the same thing with other collectibles and even other hard assets. They care a lot about gold. Gold is money. Gold is a reserve asset. It was officially demonetized in 1973, but thanks to the French, who objected to the U.S. position, it was never completely eliminated from the international monetary system. This is why China is acquiring thousands of tons, why Russia has increased its gold reserves 70% in the last 4 years. They know that when the international monetary system collapses, which it will, it's collapsed 3 times in the past 100 years, 1917, 1939, 1971. These things happen. Next time it collapses, it's not the end of the world, but it means the major trading and financial powers have to come together and reform the system. So they're going to sit down at the table. So it's like a game of Texas Hold'em. How big is your pile of chips? Gold are the chips, and that's why China is acquiring it. Look, China has purchased several thousand tons in the last 4 years. Are they dopes? Or do they know something most people don't? I would say they're not dopes.
Right. So the art market, you know, to put it in economic market terms, it's sending a price signal.
Correct.
That you can ignore, or you can take that on board.
Correct.
And understand where that's going. I want to move on.
Right.
You have recently said that Janet Yellen, who's going to incoming Fed chairman to replace Ben Bernanke. What can we expect from Janet Yellen?
Well, Ben Bernanke is to Lady Gaga as Janet Yellen is to Miley Cyrus. In other words,
let's twerk. Let's all twerk.
She's a trashier version of the original. Although actually Gaga has a little talent. I'm not sure Bernanke and Yellen do. But the point is, she's more hard shell, more model based. She's going to print more money.
Wait, hard shell? Meaning,
I say hard shell.
Meaning
I just mean inflexible.
Ideologically driven.
Ideologically driven, model driven, academically driven, impervious to the real world.
So she'll look at her models no matter what the actual market tells her.
Correct.
She's siloed. She's like blinkers.
Correct. Most Keynesians do. I mean, the Keynesian theory works fine in theory, not in the real world, and neither does her brand of monetarism or her brand of monetary ease. But be that as it may,
she's a real let-them-eat-cake type of woman.
Well,
like they're out there with the torches. Inflation is raging, society's collapsing, but I'm sticking to my models.
That's right. And Dudley's, you know, Dudley famously said, "Let them eat iPads," and I think Janet Yellen is. Now, she wouldn't say that, of course, but you watch her behavior, look at her speeches, look at her academic papers, look at the people who are supporting her, and she is fearless when it comes to money printing. Bernanke pursued, you know, going back to the UK in the late 50s, early 60s. Harold Macmillan and the Exchequer had what they called the stop-go policy. The Bank of England had stop-go policy. Bernanke was stop-go. People talk about tapering. The Fed has tapered twice already. They had 100% taper at the end of QE1 and 100% taper at the end of QE2. It failed both times. So we kind of know tapering doesn't work. Yellen doesn't want to do stop-go. She doesn't want to be tentative. It's just going to be go-go.
Right. Okay. Now, a Russian lawmaker introduced a bill calling for the banning of holding U.S. dollars in private hands. I'm sure you heard about this.
Yep.
The reason being that the dollar he claimed was a Ponzi scheme. While it's unlikely to become law, Could such increasingly frequent public declarations against the dollar undermine faith in the currency?
The answer is yes. Like, this is a minority party in Russia. It was introduced. It probably won't become law. But it's what I call straws in the wind. If you're a legislator, why would you even do something like that unless there was some genuine concern out there? The much bigger play going on in the world is Saudi Arabia feels that the United States has betrayed them. President Obama is very close to anointing Iran as the regional hegemon in the Middle East. I talked to an expert who's very plugged into the negotiations.
Oh, by the way, 6 months ago when you predicted on Twitter a strike on Iran, I came up with a prediction that would not happen, so I won that particular Twitter battle, I must say.
Well, let's see how it plays out. The strike may be coming from a different source, from Israel, but the point being, Obama is now ready to as I say, anoint Iran as the regional hegemon. Saudi Arabia feels completely betrayed. This will be the end of the petrodollar deal, where they take our dollars and we provide their security. Obviously, we're undermining their security by promoting Iran. So there's an emerging alliance among, of all people, Saudi Arabia, Egypt, Israel, and Russia. And together, their interests would not favor the dollar. It would favor, their security and the security of Israel. It's an interesting alignment. The U.S. is withdrawing. The old saying, power abhors a vacuum. There won't be a vacuum in the Middle East. It'll be filled by these new alliances.
How's currency war selling in Russia?
There is a Russian language edition. It's selling well.
Are you causing all this mayhem? Your book? Is that what's going on here?
Well,
Jim, are you the instigator of this?
I think I was the first one in the opening pages of Currency Wars, which came out in 2011. I was the one who said that the Fed might confiscate the gold belonging to other countries in New York.
Right.
And since then, we've seen Germany and others withdraw their gold, and it's a live political issue in Switzerland and the Netherlands. So I think I might have contributed to starting that debate of, hey, where's our gold?
Quick question. You say that this is an alliance now between Saudi Arabia and Israel forming, but isn't it fair to say that alliance has been around for decades?
There's been cooperation. No one acknowledges it. Yeah, there's been cooperation, but now it's becoming more solidified.
Yeah.
If the U.S. deal, so-called, we're going to unfreeze $50 billion, and we're going to let Iran ship oil and get paid in dollars. Right now, they can ship oil all they want. They cannot get paid in dollars or euros. They have to do workarounds. Suddenly, they're going to be allowed back into the international monetary system. This is going to put downward pressure on the price of oil. They'll be selling their oil to Iran, getting paid in dollars, using the dollars to support their nuclear weaponization program.
So you say the petrodollar, which came about at the when America defaulted on its bonds in 1971, closed the gold window.
Right.
Petrodollar relationship to Saudi Arabia, America, Armaco,
right.
That's now kaput.
It's in the process of falling apart. Now, once Saudi Arabia decides that the U.S. doesn't have their back, what interest does Saudi Arabia have in supporting the dollar? I'm not saying this happens overnight, Max. This is what I've said before. These are straws in the wind. I look at the emerging GCC, central bank based in Riyadh issuing their own currency, perhaps pricing oil in that currency, perhaps the rise of the SDR, perhaps a regional ruble reserve currency in the Russian periphery. There's a Northeast Asian. There are a lot of regional things emerging. The BRICS are doing a lot of things, as you know. I'm not saying any one of these things eliminates the dollar overnight. I'm saying they all point in the same direction over a matter of years to the diminution of the dollar as the global reserve currency.
Okay, last question. When's your new book come out?
New book's coming out April 8th. It's available for pre-order now. It's got a nice, cheery title, The Death of Money, The Coming Collapse of the
Am I the
International
acknowledgements this time?
I haven't written the acknowledgements.
Okay, we better put them in this time or you never come on the show again.
Okay.
All right, right, it's time. Jim Rickards, thanks for being on the Keiser Report.
Max.
All right, that's going to do it for this edition of the Keiser Report. I'd like to thank our guest, Jim Rickards, author of Currency Wars. He'll be releasing Currency Wars 2, or The Death of Money, in early 2014. You can follow him at Twitter at James G. Rickards. If you'd like to get in touch, tweet us at Keiser Report. Until next time, Max Keiser saying bye, y'all.